Hey everyone, it is Evan here from the Trade Risk on Friday, February 8th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So let's jump into our dashboard here, take a look at how the markets fared this week. We can see it was a quiet Friday, closing mixed right around zero. We did have an opening gap lower, so we did get some recovery there, maybe a good short-term stand by the bulls, but mostly mixed on Friday's session. And when we look at the 5-day numbers, we can see still in positive territory, but coming back down towards more or less flat. We did see a bit of a pullback this week, which we'll talk about in just a little bit. When we look at some of the major averages versus some key moving averages, we can see we are still above the 10 SMA, above the 50 SMA, and we are currently grappling with the 200 SMA across all of the major averages. Saw a little bit of rejection there this week around those levels, so something to pay attention to. And when we zoom back down into our sector performance, we had utilities really step up this week and launch higher, top of the relative strength pack. Technology still holding pretty strong. Semiconductors, they've been strong the past couple of updates we've done, and industrials in there as well. On the downside, energy, biotech, and builders all leading to the downside, relative underperformance. And when we look at some of the major markets, we saw some strength out of the US dollar, long-term treasuries, shorter-term treasuries, and weakness out of the energy space, oil and natural gas selling off a bit. So let's jump into the charts here. Let's take a look at what went on, and we can see here on this weekly time frame of the S&P 500, this is the cash market. We did close lower this week by minus 0.28%, so fairly insignificant. However, we do have our first subtle sign of rejection here in this rally that started at the end of last year. So we've been, effectively moving higher here, relatively unchallenged. We had an inside week back here on the 25th of January to finish off the month. That ended up resolving to the upside, but what we see this week now is an outside reversal week. That tells us that we tried to push higher. We made intra-week highs up around 260, or I'm sorry, this is the cash market, 2738, and then we ultimately closed under 2700, so we have this nice tail above last week's highs, giving us sort of an outside reversal week. Relatively meaningless right now, just because the structure of this market hasn't quite changed at all. But in the short term, it can mix things up for a little bit for us, and it is something that we now want to pay attention to see if the sellers can find some follow through. Otherwise, on this weekly chart, we still have the same slope here. This uptrend that's been in place since the end of December is still intact. And notice from a kind of horizontal price structure, support resistance area, we are right in the middle of this 2600 to 2800 range. That's right in the middle of the chop here from the fourth quarter in 2018. That's where we currently sit right now, right in the middle. And, our bigger reference points are about 100 points in each direction, below and above us. So that, I think, covers really the weekly chart of the S&P 500. Let's go down to the daily chart, take a look a little bit closer at some of these levels. We'll cut it over to the SPY ETF here. And we can see the pullback that we were just referencing. We topped out on Tuesday around 273.44 in the SPY, and we made an intraday low on Friday at 267.83. So that was approximately about a 5.5 point high to low pullback at this time. Of course, this pullback could continue next week. We could roll right back over and start, falling back, even lower. But so far, we've got about a 5.5 point pullback off of the highs. Nice minor pullback there. And in our Tuesday midweek video update, we basically said, look, going forward, our short-term line in the sand was the top end of this range right here. So this recent consolidation that we broke out from back on Wednesday the 30th, the top end here, that is where we would want to see this market continue to hold above, to just act as strong as possible, as pent up and as bullish as possible. We'd want to see this market holding above 266 to 267. So far, that is happening. You know, we had a nice, staged a nice kind of intraday reversal here on Friday. Maybe that's all she wrote in terms of this pullback. Maybe, you know, we just start lifting to the upside early next week, and we had a nice little couple 2.5 day shakeout, and that's it. Back on pace to, you know, call it 280 resistance test. That's a possible scenario. Doesn't have to be the scenario, but it's something we can pay attention to. The flip side of that scenario is that the pullback isn't done, and we in fact do roll back over here, maybe after a retest of the highs. Maybe we get a day or two up, failure back at these highs, and then a rollover. That to me would be kind of the cleanest situation. That'd be the best situation from a trader's perspective, just to get a nice reasonable retest and a second gauge of kind of selling pressure up here, or, you know, again, we just kind of roll back over, fall back into this range, and then, you know, this pullback that we started back on Tuesday, Wednesday will, you know, continue in its duration. Whatever the case is, I think the levels here are pretty clear, 266, 267, and then the bigger reference point would be this 260, the bottom end of this support here, the sideways range that we carved out for a little over a week. If we started to ultimately lose that, that would be certainly more concerning for the market, might open us up to a larger pullback, but, you know, one step at a time. We're certainly not there yet. So those are kind of the nearby reference points that I'd be paying attention to. We get a little bit of initial rejection up here, as clearly saw by the weekly chart. We'll see if we can get any follow through. We still have earnings that we're in the midst of. Most of the companies have reported at this time, and a lot of the key influential ones, but there are still more that you have to pay attention to. The market will have headlines coming from, so do keep that in mind. And the VIX, let's take a look at that real quick. We did mention on the midweek video that we did see a little bit of firming in the VIX right in here on Tuesday, for instance, a little bit of kind of positive divergence, or I guess negative divergence, depending on how you want to think about that relationship, but we saw a little bit of VIX firming here midweek. Ultimately, that did matter. I mean, in the sense that we did ultimately kind of get the heads up from the VIX midweek, and then we saw price kind of retrace later in the week. And again, we saw still a very subdued VIX, but a close at 16, which was basically flat here on the week. So really nothing too much to speak of. A slight early warning sign if you were looking at that close, coupled with maybe VVIX on Tuesday, Wednesday. I think that is it. Thinking about the S&P, looking at my notes, I think that's everything I had. Let's move on. Let's go to the IWM next, which we can see here. You know, relatively still, when you put this in perspective here, it's very, very minor at this spot. But you know, a pullback has to start from somewhere. So even though it looks fairly innocent now, maybe this morphs into something a little more nasty over days to come. But when we look here at the IWM, we can see we're holding above the top end of this range, 143.84 or so, 143 and change, whenever you want to draw this support at. That's going to be ultimately the bigger level to hold above. So far, we're still, you know, 5-6 points away from that. So right now, pullback is contained, a little bit of reset, a little bit of shakeout, not much else to speak of. Qs, really kind of the same thing here, running into this 170 level, couple of days pullback, nice reversal here on Friday. We'll see if that's it, or 160 and change. That is the support, bigger level that we would want to see this market hold above to continue, you know, just respecting support and in this uptrend. So that's it, I think, for the major averages. A little bit of something there depending on how closely you're trading and how active you are, but a little bit of short-term rejection. We'll see if any follow-through comes of it. And of course, you know, things like market internals, this is where we'd want to start paying attention to those. You know, if we start to get a bigger pullback here, if we start to get more weakness, we'd like to see, you know, that uptick in new 52-week lows to give us that confirmation, to you know, give us those clues as whether or not kind of the magnitude and velocity of a potential pullback. Right now, everything is very much in check. So let's go to some of the other major markets here. We're going to TLT, which I think is a notable market this week, asset class, if you will, long bonds, long treasuries here, 20+ year, 1.15%, moving back towards the year-to-date highs here, and just really kind of hammering back on resistance. Remember, in 2018, we basically went sideways the entire year with resistance around 122.50, 123, and we are right back to that spot now after consolidating for a few weeks. So it'd be very interesting to see how this acts, how this follows up next week. It'd be interesting if we get that breakout. We're going to see yields continue to fall here. And whether or not that spills over to, if this is a potential leading, indicator, if you will, to more weakness into the equity markets, yet to be seen right now, but it is at an interesting spot, multi-month, multi-year resistance at this point. So let's see how it fares next week. If we go to energy next, oil, we could see here that we did get that pullback in USO as well. We tried to get the late week pullback breakout last week. That ultimately just really couldn't hold itself, sustain itself, and we kind of fell back into this old kind of chop, this range that USO has been mostly comfortable trading in. So right around $11 or so. Price structure really hasn't changed a whole lot here, so not too interesting one way or the other just yet in USO, but a very kind of orderly pullback over the past 5-6 days. If we go to natural gas next, we can see this continues to sell off, makes new year-to-date lows for 2019, and you can see it is kind of developing though, and this potentially, I guess bullish wedge, as most people would label that. Not really getting into the label specifically and whether or not this is valid and drawn correctly and all that. It really is irrelevant to me and my trading and my style. The bottom line is we've been kind of pulling back here. We're tightening though, and we do have potential kind of coiled breakout here if we can start to really, in my case, I would like to see us kind of reclaim the 2019 support and break this downtrend line. So for me, 24.50 or so, 24.60, if we suddenly launch through there with volume, that would be interesting to me. Otherwise, I think you got to respect the downtrend here. Natural gas looks weak, and it is breaking to new lows here. So for me, not looking to be a hero, not interested in this yet at all. Frankly, if it started to again have this high volume surge back over 25, that could change, but something to be aware of, but not necessarily preemptively going after, in my opinion. GLD next, gold, you can see on the week here, did close slightly lower. It's an inside week, had a nice kind of clean, orderly pullback for 4 or 5 days, deservedly so. It had a nice run to the upside over the past couple of months, so potentially kind of a bull flag continuation pattern here for GLD. We'll see, but we have a nice little reference point to use against. And silver, kind of in the same spot, had a nice run over the past couple of months. I had this pullback here off of about 15.19 or so, and now it's starting to lift back, perk up a little bit here into the end of the week, but ultimately still did close down with an inside week and down 0.6%. Still have a position here, talked about that position a couple of weeks ago and where we got into it, so we're still holding long silver as a current active position. So that, I think, covers all the major markets I wanted to go through. Let's take a look at some sectors now, go through the top 3 performing, bottom 3 performing. If we look at our top 3, number 1 is XLU, up over 2% this week and starting to break through some, let's go down to that daily chart, starting to break through some resistance here around this 56 area, 55.50 and change. It's where the market's topped out a couple of times in the past. It's had a little bit of trouble getting above that, except for this flare up here in November, and now we're starting to just kind of cut right through it. Strong close to finish out the week. Ultimately, the highs up here around 57. Looks like that's where we're headed right now. Trend remains higher, tough to chase, but so far momentum there behind the utilities. XLK, second top performer this week is technology. Looks, again, quite strong here. Really, has gone vertical on this ascent back here from the lows. It hasn't really, broken this trend at all. It's still holding up. It's still a tough chase coming back into this resistance, but it is holding up. MACD trying to do its best at holding at new highs there. So for XLK, look, as long as it's holding above, this broad trend line, this slope here, as long as you're seeing kind of buyers step in where they need to, this continues to move higher, but it's not an easy chase. And XLI here, top 3 on the week, 1.66% to the upside, right into resistance, testing it. It failed at resistance, pulled back a couple of days. So it is here, again, really tough to purchase at this level, but it's enjoyed a nice run run here in pretty much a straight line. I would expect a little bit of difficulty around the 73 area. On the downside, energy, XLE kind of rolling right back over, similar to oil, tried to get that breakout above this range, and now it's kind of just falling back into this old range here from just a few weeks ago throughout January. Really, you know, just not much to speak of yet. Reversal today on Friday. Would ideally like to hold around this 61, 61.50 area. That would be the best bull case there, as it just kind of finds support where it was finding support in January and then makes another attempt at the highs in a couple of weeks or so. IBB also kind of back into its sideways range here. If we look at this, you know, it really hasn't gone anywhere since, you know, the first week of January, January 9th. I mean, that's where it was trading at 107. It's trading at 107 now. That's about 4 weeks or so of moving sideways. Nothing wrong with that. You know, as traders, I think we like that. We like the sideways consolidation. Gives us some confidence when it finally starts to get that breakout. So IBB, I think, is, you know, an interesting one to pay attention to, and it's on the risk spectrum. So I think this one, you know, could offer some clues into what's, you know, perhaps going to be occurring in some of the broad averages, if you will. If we started to get a kind of a nasty breakdown of this consolidation, then you know, that doesn't bode well for risk assets in general. Something to pay attention to. It was one of the first to break above and reclaim some significant support down here around 101. Since it's going sideways, I also think it's worth watching now. Materials, really just, I don't have much to say about this. Just looks kind of messy, sideways range. You know, it's still certainly off of the highs from the late December, but really I don't see a whole lot here that I'm interested in. 51, 51.50 or so. This was a pretty important level going all the way back multiple years. So ideally we hold above that, and that's about as far as I would look at. Otherwise, mostly just sideways consolidation here. So that is it. That rounds out the recap for the weekend. A little bit of pullback, a little bit of two-way trading, maybe a change of character at hand. We are going to see how this shakes out, how we get a follow-through week next week. I think it'll be interesting, but remember, let's just you know, take one step at a time, and remember your time frame that you live on. So that is it. Thanks so much for tuning in. As always, you can subscribe on YouTube, follow us on the Trade Risk blog, and I will be back on Tuesday with the midweek video. Have a great weekend.